this account's getting a little bit huge.
Wow. Mm-hmm.
Yeah. The stock buying power of $827,000 is a lot of money, isn't it? We need to do some big trades to get that down. So we like to keep the stock buying power at no less than half of the net liquid value, which is a sort of 284, call it 300. So yeah, we've got hundreds of thousands of dollars waiting to be invested here. We're not day trading, but if we did, we've got 1.6 million to do it with. So there's no shortage of money floating around this. The amount of cash that's out there waiting to pull through is also pretty huge. So it's in fine fettle, as we say up here in the Northeast. Okay, I'm going to see people. Welcome to those just joined us. You're relying on me after the start time. You're relying on me noticing that there's people in the waiting room, so it's a bit random. But we've just been looking at the account information up here, and we've got the net liquid value of the account is 569,000. So huge, another well over $500,000 in cash. That's money that's sort of waiting to pull through. And we've got an amazing amount of buying power, well over $800,000. We don't do day trading, but if we did, there's 1.6 million of it there. So there's a lot of money floating about in this account. It's getting to be huge, and it should be easier to make lots of money when you're starting with lots of money. I think you can. Right, so the top half of this screen are the shares that we already own. These are shares that have been put to us. So we've sold a promise to buy them at a particular price, and someone has, in exchange for some money, and someone has decided to actually take us up on the promise. That's how we've acquired these shares. So going across the page, the first one is CDE, which is a mining company. So in this first example at the top, we've had the shares put to us at $10. They're currently only $5.42, which doesn't make us very happy. And we've got 600 of them. And so by the time the net there is $4.58. However, we've had $3.30 of income by selling the put. So the net is actually $1.28. And even across 600 shares, that's only 768. So it's not huge. And what we've calculated here is it's also how much we're down, but it's also the income we would need to get back in the black on it. And we can choose to do that whenever we wish. And we might do one this evening just to demonstrate how it works. We can choose any one you like, but let's have a look. VIAC, it looks like a fair old candidate. So we'll have a look at VIAC. So if you've got a question or a comment, just unmute yourself. No problem with that. It's just that there's some background noise. Before we go off and have a look at doing that, though, let's just have a look. So we've also then got in column O, the forecast. So this is where we think this stock is going, these stocks are going in the short term. I don't think that's not correct there. Value line, don't think that's for sure. Where we've got them in, that's what value line think is going to happen to it. Value line are pretty similar to us on that. And here we're saying, well, okay, if the stock does get to the forecast level, are we then in the black? And in the case of CDE, no, we're not. We're still not in the black by $2.50. Right. So which one we're going to look at? Let's look at, what did I say, VIAC. So can someone remember? I'll write them down. Write these numbers down. So VIAC, we've paid 50, and the current price is about $4.41. We'll see that shortly. sorry, $41.40. And we've had income of $9.65. And to get straight, we need $4.95. So let's see what can be done. So stop sharing this, and we'll start sharing again the trading platform. Here it is. And we will go to the option chain. So I haven't looked at it. This might not work. I haven't looked at it before we've started the meeting. So we'll just see. It's behaved itself so far this evening. It's ran at a reasonable speed, which is Viacom. Okay, and we would give it plenty of time. So let's look at April. And so the calculation that we're looking for is, it's money out, money in. So minus 50, that's what we paid for it. Plus whatever the current price is, actually it's gone down. So it's 35.34 plus 35.965, which is the put income we got for it. So we actually need $5.01 to get back into a good position on this. So if we look at the bid prices for April here, and if we go down to where we get at least $5, and here it is, 40. So we can exchange our $50 put, get rid of it, and replace it with a $40 put, and come out with about $1.25 ahead, and a lot less exposure, and even more buying power. So if anyone's not happy for us to do this, you have to unmute and let me know. We might get a bit more than 625. So see how many we've actually got, and make sure that my spreadsheet's right, because things change a lot. We've got this strange number showing 201. I have no idea what that's about. That's 2 contracts. We certainly haven't bought 201. So the 40, there we go. And it's showing 625 to 645. We'll try for 635.
Jeff, can I ask a question?
Yeah. Just answering. I'm just answering one online. Sorry, go on.
Why do we sell the ones that we've got already? Why don't we wait until the price has gone up a bit?
Because did you come in late? Because what we're looking at is the ones where the forecast increase in the price isn't going to get us into a profitable situation. So it's not going to go up enough. So I want to take some action to get it to a position where it can make us some profit. So by taking a little bit of profit now, get to put it in the black and put it into a position that it is likely to, to get beyond. That's what's going on. So back to the portfolio, we need to actually now sell those shares. And it's a 201. I don't know why that is. 35.36. So we probably won't get that to come down a bit. And there it goes, including that strange one. Now, so we need to put a lid order in place as well. So that's buy to open, and Viac, we sold the 40, so 1 strike price down to 37.50, and we got for it 635. So we'll give them 60 cents. Not likely to actually take that. Okay, so I'll go back to the spreadsheet and we'll have a further look, see what else is going on in there. So I'm not going to knock this out yet, but because I want to make a note to make sure that when we come to take a further action on it, I take into account what we've already done. So I'll need some of these figures, so I'll sort them out later. But the main thing is, if we now go on to own VIAC, Viacom, it will be at $40, not at $50. And from there, we are underneath the forecast, which is $47. So we then got a chance of actually doing okay with it. All the ones that are in red there, they're in that same position, but there's no rush to do them. There's, we've got plenty of time. The ones below that in black are where we are in the situation where the stock has been bought at below the forecast, and we've had income as well on them along the way, so we're not too worried about them. I'll just keep my eye on them. Out of a portfolio of nearly 600,000, it's like 5,000 adrift, so we're definitely not in a bad situation.
Jeff, I can't see your spreadsheet.
Oh, sorry, I'll keep doing that. It's because I'm stupid. No, it's not just you. No one can see it except me. Sorry, there we are. So what I'm saying is, of the shares that we, come on, move. That's it. Of the stocks that we already own, there's, well, now 3 of those are at the top there. We bought them at a price which we're now forecasting on a new forecast is lower. So even if it gets to our forecast, we'll be in the red. So one by one, we'll be getting rid of those and doing what we've just done with Viac at different prices. So we're looking at the charts to get them as high as we can when we do it. So what I did there was just really a demonstration. The ones below that are less problematic. In those cases, we've paid less than the forecast for them. So, I'm happy to let them drift up and to take opportunities on them to sell calls or to exchange for new puts, whatever looks appropriate at the time. The bottom half here, these are the, just increase the size a bit for you. These are the puts that we have sold for January. So these are promises that we've made to buy shares at these strike prices against these current prices. That's the number of contracts, and each contract is 100 shares. So that's 200, 200, 400, and so on. The premiums that we've got, there's no lid involved in this and no exposure because we don't actually own them yet. So in the case of AU, which is it's a chemical symbol for gold, isn't it? It's a gold mining company anyway. So we've paid, we will be paying 23. It's currently only at 20.64. And bear in mind, this week prices are depressed as we come into expiration, but we've already had $7.40 anyway. So we're actually $5 ahead. And the strike price at 23 compares to our short-term forecast at $35. So we're perfectly happy with that one. BlackBerry, not a problem because it just moves up and down like I don't know what. And we got a very good premium for it, nearly $6. We're only $24 underwater. I have no doubt that that stock will move from, it's above 9 now, up to 12, and it won't take long. So I'm not worried about that. CDE, that's more of a concern because CDE is a mining company, and mining stocks move slowly. And even, it's not a fortune, but it's $520. So that one will be, it's only $1.30 that we'll be trying to cover. So I can do that in one leap, I'm absolutely sure, when the time comes. What am I doing? I know I'm formatting those cells to make the negative ones red so they stand out. That's what I'm doing. 12 cents, there we go. JetBlue Airlines, again, we've paid 19. They're only at 14.50. We've had 4.20 in income on them. That puts us 30 cents a share down, only $30 overall. And they are forecast in the short term to get up to $20. So again, not scope there for concern. SLV, this is actually what's called an ETF. It's silver. So effectively, this is us buying silver, but in the form of a share. And we paid $28 for it. And it's way down there. This is going to take some, a bit of magic to get out of. It's only $8.39 at the moment. I'm going to check that. Just excuse me while I check that. It doesn't look right. We're not usually that bad. 22.34. That's more like it. Something wrong with the spreadsheet there. So the current price is 22. Yeah, I don't know why that one wasn't right. And the last one there is Urban Outfitters, which is a retailer. Coming to their best quarter. We believe they've had a good quarter, a decent Christmas with their online sales. We've paid 38, which is definitely too much, but that's the forecast that we decided was okay, especially with an $8 premium. So effectively we paid $30 for them with $2 underwater, and they're still forecast to get up to 41. So not a big problem to us. Any questions, any points, anything?
Yeah, Jeff, on those shares that you said that you'd flagged that we need to get rid of, if you know that now, how do you make the decision as to when to do it?
Okay, good question. I'm going to share something with you here, a different share again. I hope. No, I'm not. I have to open it on my screen first. Now I can share it. And this is what I want. Okay, so this is my charts. So I want to take you down to something which is, I'll just have a look, see what's happening overall at the moment. So the market is actually low at the moment, so it might go a little bit lower, but it's in its channel going up. That's just me, I place that there. It's in its channel going up, but it can't stand still, so it's going up and down. So one reason not to deal with them at the moment is because we are at a low. So we've had a high in November, less of a high in sort of December, another one in January, and I've got no doubt there'll be one about here as well. So I'm waiting for the prices to improve before we move on them. And the second thing that I'm looking at is on this chart called the VIX. So the VIX is a measure of volatility, and it's inverse to the market. So when the market is low, this chart's high, and when the market is high, this chart is low. And option prices vary with volatility. So when there's a lot of volatility, we get very good prices. And when there's less volatility, we don't. So each month, you can see that's January, July, August, September. November wasn't so bright. Little mini one in December. December, it was horrendous. People were worrying about the virus. And that's when the Omicron came in. It sort of shot up, and then it's realized it's not quite so bad at all. And we're now waiting for the next spike. So I'm waiting for this to be high, so that when we sell an option, including the ones that the one we just sold tonight, if we sell it when the volatility is high, we get more for the option. So the premium is higher. So you're selling exactly the same strike price for exactly the same month, but you're getting more money for it. So I'm waiting. If I can get it, I want the market and the volatility to be high. So it's going to be a compromise somewhere in between. Now, this behaves very much like a stock. So you can see at the bottom of the screen, I've got indicators. And the main one that we use are, well, there's two, stochastics. So the stochastics are below that red line, and they'll look as if they're heading up. And then we've got the MACD, which are these blue bars up and down here. So when the periods when the bars are above the line correspond to when the market, this high, and also the lows correspond to when it's low, and it moves in a cycle. So at the moment it's been down, it's just got its head above the of the line there, and we think it will still continue to go up further. So I'm watching that, and I'm waiting for this to get a bit higher, and then we can deal with those stocks, and we'll get more money for it. So tonight's was really a demonstration. Is that clear? Sometimes I answer too much.
Yeah, that's good. Thank you, Jeff.
Yeah, there generally is a reason for most things. Okay, so that said, I like to try and do some trades on the club meetings. So we've got some that we can look at. And if I stop sharing this and go back to, I'll show you the charts first. Stop having this sort of dot about everywhere. So the first one I've got in mind is this one. And I can't remember whether you've actually got them or not, but we'll have a look in a minute. So this is Bed, Bathroom and Beyond, which is a retailer. And it's at a very good low at the moment. And the indicators, again, coming up towards the line, and also the MACDs, they're about to head up too. So and let me also tell you that the forecast on this is 26. So there's a forecast, short-term forecast, that is going to get back up to this sort of level. So that's a long way between the sort of $14 that we're at now and 25, 26. So there should be good scope to get some money in here, asking the stock to not have to do much work, to not have to get very high to give us some decent money. So that's Bed, Bathroom and Beyond. We'll have a look at that one. Another one is Sage. And these are in, following a lot of work, these are in the order at which they will give us the highest percentage. So the highest percentage return is probably on that first one, BBY. This is the second one. Again, at a long-term low, but it's been down there for quite a long time, and it is at a good low. So if we do this one, I'd probably want to give it plenty of time and not ask it to do much work. It's actually forecast to get back up. There's a gap here. So it's forecast to get up to that gap and then also to close that gap. But initially to get up to sort of 67 or something. There's no way are we going to wait for it to get up to 67. We'll be looking to see if we can make some money. It'll probably be at 50. That'll be where the strike price is, preferably even sort of 48 or something. So we'll have a look at that. And the third one is Fossil, the watch company. I have to learn my alphabet next. That's top of the agenda. Here we are. So this thing had a real spike up, and it's over corrected itself. So it's at a good low. And we're looking at a forecast of, I think it's 16. Let's have a look. Yeah, 16. So that's up there. And that should give us plenty of scope to find somewhere nice in between 15, preferably 14 or something, where we can get some money off it on its way up. And again, the indicators are tracking back up, tracking up above the line. So they look all right. I'll have a look for one more. Let's have a look. Oh yeah, my favorite, BlackBerry. So BlackBerry sort of has a habit of just running normally between sort of 10 and 12. It's a little bit below that at the moment. It pays really good premiums because it's quite volatile. And it also has single dollar strike price intervals, but unusually when you're doing the price of it, the prices go up and down in single cents, even on the options. So we'll be looking, it's forecast to get up to 12 at least, that's about there, and we'll look to get to 11. So even though that's only $3 away from where we are now, we can do quite a number of them. It'll make us some money. So that's what we're going to look at. Stop sharing that, start sharing a trading platform again, and let's see where we're at. So the first one that I've mentioned is Bed, Bathroom and Beyond. So first of all, let's see. Yeah, we actually have some already. So we're already got some puts sold for February, and these were done when there was a spike, so it's far too high. We've actually sold a 29 strike price put, so that's very high. That's no good. We've made up for that by selling a much lower one, 19, but I think we can effectively dollar cost average again by selling some more at a price that's even below 19. So the average price will then come, we're bringing it down. So when it was 29, it was 29 times 3. Now it's 29 times 3 plus 19 times 4 divided by 7. So the average is coming down. But it's a good trade in its own right. So we might well do that anyway. So let's have a look. Yes. Sorry, is that a question? I probably told you about BlackBerry before, but it's no longer a manufacturer of telephones. They are software developers and artificial intelligence people, and they're sat on a fortune. So I would normally want to go a bit further.
Jeff, are we doing BlackBerry or Bed Bath & Beyond?
Oh, sorry, I'm out of my order, aren't I? Yeah, BBY. Sorry, there you go. Oops, too many B's now. Yeah, do that one. Sorry. Right. Yeah, so this one we can go further ahead. And now there's a March, there's no April, March. So I'm going to give it lots of time to May. Let's see what's available for May. And we can see up here, we've got the current price, which is basically $14. And it's forecast to get up to 22. So we just want to, and it's single dollar intervals. So we can go anywhere really in between 15 and 22. So the bids here, 15 is 340, 22 is 850. We can go where we like on it. I suggest this, because we're going further out into the future into May, I think we can probably go to 15. Do you want to look at the charts again, or are you happy to go with 15? I take that as being happy to go at 15. So that'll give us, did we have any? We don't have any, do we, BBY? Yeah, we do. That's, yeah, sorry. That is the one. So by going for 15, we're going to pull that average down even more. And with all that buying power, we can go for a reasonable number. We can go for 6. So if anyone thinks that's a problem, now is the time to shout up. So here we go. Sell to open. I'm going to go for 6 of them. It's quite a cheap share for what we're doing. And we're going to see if we can get in between these two prices. We'll try for 350.
Jeff, why haven't you gone for 16 or 17 or something like that?
Well, the further we go up, yes, we get more money, but then the chances of it getting there and the time taken to get there will be longer. So let's have another look at the chart and see what that looks like. And being cautious is what's happening. Right. So 15 is like only there. Well, actually, that's very bad, isn't it? We're actually not asking you to do anything at all. That is very low. Have I got my forecast right? Let's have a look. BBB. I'm getting mixed up with maybe 26. Yeah, so it's forecast to get to 26. So that's there. I think we must be looking at BB before. So there's plenty of scope in between. We could definitely go a bit higher. So
look at 20 maybe.
Oh, we're on a roll. 20.
18.
If you look at the speed, look at the slope of this thing.
Yeah, it's take a long time, won't it?
It's slow. It's not a fast mover. So When it's coming, even coming down, apart from when it gaps, it's quite slow. So it will take quite a long time. But on the other hand, we've got quite a long time until May. If I do that, I've increased the time. So when it's gone up previously, it tends to go up sharply, gap up. So this is the opposite to normal. So normally we say stock take the stairs when it's going up and the elevator when it's going down, but this is the opposite. There we are. We can do as you wish, but I think 18 will, I'll stop sharing that and go back to the, so 18 is, I think, safe enough. We could go with 18. So whoever spotted that, well done. You all right with 18?
Yes.
Yes.
And we can still do 6.
Because the downside is that it doesn't do much for your dollar cost averaging.
True. It doesn't pull that down so much. Well, except that if you take into account the premium as well, the premium is higher. So we've got $5.65 going into the equation instead of whatever it was at $2 odd. So we're actually making up for it. So it's not so bad. 265. As many of you know, I'm only comfortable if I don't get it on the first attempt. Otherwise, I think I've been cheated. So this is like $3,400 coming in. There we are. That's gone in. Right. Okay. So 565 we got for it, and it was the 18. So we now need to put a lid order in. So we go one strike price down, which is going to be 17, and we'll give them 50 cents if they're lucky. And they should feel good about that. So this is a limit order. It'll only trigger if the price comes down from where it is now, sort of $5 down to 50 cents, and put our protective trade in place. It doesn't, I'll have to sort this out later on. It doesn't like the fact that we've already got our lid orders in for the other one. So I'll have to sort that. What I have to do is cancel them and then put a new one in that covers all of it. Okay. And who was next? Sage. So let's stop sharing that and start sharing the charts again. Have a look at Sage. While we're here, just have a quick look and see how the overall market's doing. Yeah, it's respecting my line. That's good. Sage. So Sage is currently at sort of $40 round terms, and it is forecast to get up to $80. So over the long term, and that is long term, we're talking probably 9 months, 12 months, it's due to double. So we don't mind owning it, but we definitely want to be paid for it. In the shorter term, it's likely, to get up to this sort of level where it's been living, which is only sort of 45. So it's possibly quite a slow mover. We don't want too many of these. What do we think? What I think is, let's have a look at the premiums.
Based on that chart, Jeff, does it not give you the impression that it's going to decline further, so that if we delay buying, that we'll get it at a better price or at a higher value for the option?
Let's have a look.
Because
it is at a fairly strong low point, but if I go out on it, it's not that's sort of April, that's the pandemic back then, April 2020. So it is at a very, very low. And the indicators, they're not so brilliant. They are middling, I've got to say. I think I might have changed my mind on Sage. I think that if we were looking to get, to sell the 50, but the 50 is here, and it hasn't been at that level for a long time, and it probably wants us to have a $45 lid on it, which is expensive as well. I've gone off it. You've talked me out of it. Right. Let's have a look at fossil instead. Let's just go back looking at the long term. It's been a lot higher than this. This one, the indicators are far more satisfactory. It has been down. It is on its slow recovery up. It is expected to do well out of the Christmas sales and so on. And we don't have to go very far up to find a price. So we're looking at something around 15 or less. So let's stop sharing that and have a look at the, and we, fossil. Now, because it's in its best quarter now, because that's when its results come out from Christmas, we can look at March. So that's a nice early one. Single strike price intervals, current price 1040 thereabouts. We can go we want to be in between where we are now and 16. So somewhere in between that. So we're looking at possibly 14 or 15. I'm looking at the bids, I'm putting the bids. So there's a good price to be had, I think, here. That's quite a good price, I think, on such a low cost stock. So if we went for even the 15 and got 470, we'll try and get a bit more. So it'd be 15 minus 4.7. So as long as it then stays above $10.30, which is already above, we would be safe. So I think that's okay. Does anyone disagree? Anyone got any alternatives or want to be really bold? Don't like being really bold these days.
Just seen the comment that Jonathan put in the chat, but I don't even know what he's talking about.
Oh, I can't even see the chat. Hang on, here's a comment in the chat. Fossils showing nasty long-term double top pattern. Okay, we better have another look. Gonna talk me out this one about. But yeah, always worth making the comment and always worth having a look. So I welcome that. So did we say the 15 or the 40? We said the 15.
Yeah.
Okay, and now we could go for as many as like 13 or 15 to make this into 5% of the portfolio if they're called out, but that's a lot. But given the amount of money we've got, I think we go for 10. I think that's what we get to the point eventually. We tend to work in batches of 10. And it's 470 by 490. We'll have a look at 480 and then we'll see what the live prices are. And that being 10 will help with the dollar cost averaging if that was the one. So they're not coming up. Don't know why they're not coming up, but they're not coming up. We'll try and get it. Oh, look, they've given us it. Bloody hell. We must have gone too low. Oh, that's not the idea. Right. So we now need to put the lid in place. So change that to buy to open. We go down one strike price. And what do we get? We got for it fossil, we got 480. So I'll go with 45 cents. So it's about 10% is where I'm heading to. So again, this will only trigger if the price gets down to 45 cents. So we just want it sitting in the background. There we are. Have I got another one? Another one. Oh yeah, we'll have a look at BlackBerry. So I'll go back to the charts. Back up to BlackBerry. There it is. We'll pull right out. So apart from these spikes, which was some people met, it was some shenanigans in the market where small investors were trying to see off the big guys. We just made money from it. There was no problem with that. But it lives around this area when it's not being messed about with. If it does get messed about with, it tends to be in our favor. So happy to, it's sort of an old reliable thing. Indicators sort of moving in the right direction. We certainly think it will get to 12, but we're not going to go as far as that. We'll have a look at 11 perhaps and see what the March will be fine. It's quite volatile. It's always moving, even though it's within a narrow range, which is why you tend to get quite good premiums for it. So we don't have to wait months on end for this one. So let's see what's happening. So current price is basically 9. We expected to get to 12, so we don't want to go as high as 12, but we can certainly go to 11, and that will give us $2.27. Is that all right? So
11 looks good.
yeah, so that means as long as it stays above 873, we're all right. So that's not a bad percentage. Everyone happy?
Yes.
And again, we could do 14 easily at this sort of price, but we'll do 10. Now, before I sort of press the button on this, I should say that normally when I trade puts on BlackBerry, I don't bother with a lid because it's right down there anyway. So $8, $10. It hasn't got that far to go down. So there's just isn't such a big risk on it. And if we did put a lid on, we're going to be taking a chunk out of some figure like 228. So it turns out to be quite expensive. Let's have a look. And yeah, so the other thing I like about it is we can see from these prices that it's not 5 or 10 cent intervals on the prices, it's 1 cent at a time. So we can try, for example, for 10.31. In fact, I'll go for 10.32 and I'll tell you why when I place it. Everyone okay? Anyone not okay? What the point?
All fine.
We're okay. Right, so we shouldn't get this at 2.32, but I've done it so I can demonstrate something to you. And we haven't. See, I'm happy again now, we haven't got it. So we're going to orders, there it is, BB. Because it's single cents, we can use the little arrows. So it's really easy and quick for us to replace the order. So we can move down a cent at a time until we find the spot where we get it. You should give it a moment because sometimes it's a bit slow to react at their end. There we go, $2.30. So we got $2.30 for that. And we got 1,000 of them. So there are $2,300 there in our profit pipeline. Okay, let's just have a look. Have we had any? We haven't made a dent in it. The stock buying power has gone under 800,000, but we haven't really made a dent in it. So we're definitely going to have to do some thinking here and find, perhaps go for bigger trades or something. I think I need a good think about what we're going to do with it. Any questions? Anything anyone's wondering about or